Oil technical analysis long term for the week of September 5th at commoditiesmansion.com. The light sweet crude contract fell on Friday after posting a fairly bullish week. The result was a slightly bullish week overall, but not as impressive as it looked like it could have been maybe on Monday or Tuesday. The market seems to have a ceiling in it at the 90 level, but it also seems to have a floor in it at the 80 level. We like buying pullbacks in this market, but in order to get truly long term bullish, we need to see a close on the daily chart above the $90 level. If we get that, we will certainly hit the $100 mark before it's all said and done. But on the downside, if we get a daily close below the 80, it would be a screaming sell. We are more bullish than bearish in this market, even though we have drifted a little bit lower. And as such, we do prefer to be on the buy side. But of course, if we do close below 80, you cannot argue with the tape at that point. Looking at the Brent market, they had a fairly bullish week in the Brent pits this week as well, but it did suffer a bit on the Friday figures on the job report out of the United States. You can see that it pulled back to a support level there in the form of about 110. It did bounce, it did form a little bit of a hammer, as of, it shows that there is a little bit of strength there. We think that even with the weak demand coming out of the United States, there are plenty of countries out there willing to buy oil. So this market got a bid just at the, again, 110 level. The overall picture during the last several months has been somewhat mixed, so we are bullish, but we need to see a move above 115 to get bullish for the long term. A breaking of the 120 level sends us much, much higher, but if we go below the $100 mark, this market could go south in a very short amount of time. With these levels in mind, we are trading with a bullish bias, but we are aware of the fact that anything below 100 is a horrible sign in this market.